first. All right. I'm getting everything set up here. Let me go ahead and just post this link a couple places. Let me know in the chat if you guys can hear me okay.
Yes, loud and clear, man. Loud and clear.
All right. Meijin. Why is Meijin an actual rug dealer? Look at this guy. That's so funny. All right. Let me know in the chat if you guys can hear me. Everything sounds good. Awesome. That's good to know. Let me just shut the door to my office real quick. Let's see. I posted it. 1, 2 Discords, Twitter. Oh, shit. Yeah, my Telegram. It'd probably be good if I posted in my Telegram, right? Haha. All right, let me shut the door to my office, and we will get started in just a minute. All right. This light is a little too bright. All right, that's a little better. Okay. So this live stream, it's not going to be super long. I want to go over some charts right now. Up on the screen is the S&P 500. I want to go over that real quick. And then obviously go over Bitcoin, and then as well as the charts from my Telegram members that put in their chart requests yesterday for the live stream. So I'm going to go over a lot of those. So anybody that's joining from the Elevate Trading Discord or Dubwise's educational Discord, Twitter, YouTube, wherever, hold your chart requests. I will let you guys know when we're going to go ahead and do the rest of yours. But my Telegram members, they do get priority. If you're interested in getting into that Telegram, link is down in the description below. Coffee is life. Okay. Oh, good. I can hear myself. My monitor is on. That's good. Okay. Get my audio right. All right. Hello, everybody in Flying Cat Signals. Hello, everybody in Elevate Trading, YouTube, Twitter. My name is Kobra Trading. I'm sure that you know that by now. Let's go ahead and get into some charts. All right. So, like I said, I want to make this a little bit of a shorter live stream. I don't want it to go longer than an hour. And the reason why is because Jerome Powell, the head of the Federal Reserve, is going to be doing his, I guess, like end of first quarter whole wrap up speech, whatever. There's going to be lots of information in there. A lot of people are anticipating information to be coming out about interest rates and bonds, treasury securities, what they're looking at doing in terms of quantitative easing, i.e. money printer go burr, all that good shit, right? So I do want to watch that live today. I've got other work that I've got to get done for other clients, etc. So we're going to keep this to just about an hour before that speech starts, and then we'll go from there. I might be able to actually live stream the live broadcast of him talking. I don't know. I might see if I can do that, but that might be a little too complicated. So,
would be cool.
For right now, yes, everything is pretty much red today. There's a lot of things that have been going on. Most of this is in anticipation of that news. So, buy or sell the rumor, buy or sell the news. That's pretty much how things go. News runs markets because, we all know, right? We all react to news. We're emotional creatures. We react to the news. That's what moves the markets at the end of the day. So S&P 500, Dow Jones, in general, not looking too great. It's just been pretty much flat. This is not looking all that hot right here. Pretty much fucking flat, right? Okay. That was our high up here. I guess 32, just over 32,000. So SPX, pretty much same thing, descending channel. Now we do have these trend lines down here from the majors to be watching, but this is just kind of like, a yearly trend line, right? I mean, this goes back to 2020 in December. So just before the new year. So this is something that I'm watching. To me, honestly, this just looks like a massive bull flag to me. So that's pretty much what I would be expecting from that, and continue higher. Markets only go up, right? Obviously, I don't want to spend too much time on these. So let's hop over to Bitcoin and take a look at what we got here. So I'll go over the higher timeframes first, and then just kind of work my way down. We do still have this fractal. I've been harping on this fractal for quite some time now. And this, honestly, to me, it looks like where we're at. I really do think that if we get something similar to this, like we have back here with a big bullish engulfing candle, chances are we will have one more leg up to probably at least hit, $100,000, that really big psychological number, right? So that's what I'm pretty much expecting with that. If we come down, let's look at the indicators. We're trying to bounce off the top upper limit of the RSI, which is a good thing. For those of you that don't know RSI, I think I did a tutorial on it. Not sure. I got to check through my videos. If I didn't, I'll make one. In general, the RSI, it's really only super useful on these higher time frames. When you see something like this, when it first comes in, and then you start using the upper limit and that 56 mark as support, that normally just means that it's in a very, very strong uptrend, right? Normally, when you break down below that 56 mark, normally, as you can see, that normally signifies some kind of correction or a market reversal. Here, we weren't able to stay above it. We just kind of went sideways. This was part of that really long multi-year correction. And then we finally broke back out above it and held. So officially on the weekly chart, the bull market didn't really begin until October. But at the end of the day, this whole uptrend has been going on since March last year, right after this whole COVID crash, when everything tanked across the board. So this is what I'm looking for in terms of a fractal on the weekly chart. Daily chart, this is pretty much where we're at right now. This overall trend right here from back in March all the way up until here, we've never even tested this 382. And this is pretty much where we are at right now, with price action pretty much going back to the beginning of the year in January. So we've been stuck in this ascending channel. There isn't really too much to tell about that. I mean, it's right in front of you. So we've been battling with this median line, though. That's something that I'm very interested in seeing if it holds or if it breaks. We've just been sitting right on top of it. I don't really like when price action hovers like this closely to the median line, directly on it. I really don't like that. So right now I'm out of positions. I was short last night. Bitcoin just a couple hours ago. It popped up on this wick. When we get into lower time frames, I'll show you. But Bitcoin popped up and it knocked me out. My Ethereum position was still good. That was in the profit, and I closed that out. I don't know what's going to happen after this Jerome Powell speech. I'd rather wait until after the volatility is over, so that I have a clear picture of what's going to happen with the market. So that's pretty much what's going on with this daily chart here. There's not really too much else to say. This MACD, we need a lot of bullish momentum and volume to be able to be able to pick this back up and be retesting the top of this, upper channel trend line here. We are using the 56 level as resistance, not really that great. We do want to see a breakthrough of that to be retesting the upper limit. So right now, just kind of, stagnant for the last couple of days, as you can see, 3 days or whatever, just kind of sideways chop. So if we break this down to a 4-hour chart, obviously a lot more detail here in terms of candlesticks is more information. So this is pretty much our major support and resistances, right? We've been kind of stuck in this range denoted over here. We've got our major resistance at about 51,100, major support at about 45,000, and then our midline, which is right around 47,800. And again, even on this 4-hour chart here, you can see just lots of chops, lots of wicks in both directions. Very, very little price difference between the opens and the closes of these candles here. And just about 15 minutes ago, we did just open up a new candle right at 4 p.m. for those on UTC time and 11 a.m. for those of us on Eastern Standard Time, etc. So I mentioned last night in a post, I was going to be going short if we got a confirmed close below this midline. I really don't like, there's no clear picture of whether this is going to continue downwards or not. To me, this does look corrective. But I mean, with price action like this on higher timeframes, man, it's just really awkward. Like the RSI, it hasn't really picked a direction, like for the last like 12, 16 hours, it's literally just been going flat. There isn't a large angle like there was back here on the MACD of really if this is going to be definitely going into bearish territory or not. So for right now, I'm staying flat on this. This is it's a little too hard to tell here. So let's break it down. Let's go down to a 1-hour chart here. See what we got going on. As you all know, we had this major descending wedge, which is a reversal pattern that we did break out of successfully. We came down, we retested our major 1-hour support here. This is at, where is this at? 47,500. So we retested that. And again, just really battling in here with this midline. This is really not looking good in terms of price action. I really don't like seeing price action like that. If you want to end up losing a large portion of your portfolio trading, hop into a position when the price action looks like this. You'll do it really quickly. I like money, so I'd rather just sit out during that kind of crap. Not really much else to say here on the 1-hour chart. Let's break it down to a 15-minute. Oh, that looks like hell. Let's not get into that. I started trying to draw loom lines on my chart. So here it is. Remember I said there was a wick that knocked me out of my position. So this was that wick. There was a lot of shorts laddered up here. We ended up getting stopped out. So that was kind of what the deal was with that. Let me check this live session chat real quick. Yep. Hear you. Perfect. Cool. Someone retweeted it. Awesome. Thank you for that. For the people that are helping retweet and repost the link to the live stream, I appreciate that. Anyway. Okay. So yeah, again, really indecisive price action around this median line. It's really looking to me like we're getting another one of these scenarios over here where we just kind of sit around this median line for, the better part of, 3-4 days. I kind of expect to see something like this. Maybe there's a potential fractal here, where we end up seeing, some BS chop, like this or whatever for like a while. I really don't know. It's too hard to say. A lot of these indicators, even on the lower time frames, they're just really laying flat right now. There isn't a whole bunch of confidence in the market to have more substantial volume going one way or the other. That's why we're seeing a whole bunch of wicks like this, spinning tops, bearish hammers, bullish hammers. It's just back and forth. So no direction here. So you have to remember in trading, there's long positions, there's short positions, and there's no position. No position is a position. And it's not a bad position because at the end of the day, if you are flat, you're not winning or losing. You're just waiting to get confirmation in the market of which way it's going to end up going. I think a lot of this is going to really depend on what happens with the stock market, what happens with that speech today. I am expecting volatility. We just don't know which way it's going to go. So let me get into the requests that I have from my Telegram members. First one I got is Monopoly Money. I don't know if he's in the chat right now. Hopefully he is. Let's go ahead and take a look at some of these altcoins. Sort these by symbol. I do have Sol on here. Cool. So a lot of these, man, these altcoins are also really hard to tell right now as well. See, like this right here, this is not awesome. Like I would not be picking a position on this at all. This is really, really flat. There is a potential midterm trend line here that I would be watching. If this breaks, you would probably see a retest of this support level down here. Let me make that black. Let's not get confused here. This pretty much looks like a major 1 hour support to me. And then you've got your first major 1 hour resistance pretty much right up here. So this would be resistance. Okay. And is this an all-time high here? Let's zoom out. Is this all-time high for Sol? Yes, it is. Okay. That makes sense. So got another one here. And this is just simply all-time high resistance. Oops. Okay. So that's pretty much your ranges on this. Like I mentioned, we're forming some kind of, it's just constricting price action here. A lot of the alts right now look like this. It's just kind of the way that it goes. Let me make that blue. Let's not get confused. Oops. Okay. So really just constricting price action here. It's coming into a tighter and tighter range. Your indicators are pretty much flat. The RSI looks basically bottomed out here. It did make a higher low compared to here, so there's not really any divergence going on. But in general, is my volume indicator not on here? Do I not have a volume indicator? There's my volume indicator. Wow. And the volume looks really trashy down here as well. So in terms of Sol on the 1 hour chart, I would be looking for a break of either this support level, which is now very, very tiny support level, which is now at basically the top trend line for this big triangle that we have. This is right at about 1425. Or a break of these lows, any close below probably 1335, 1325, the bottom of this trend line. And I would be expecting a retest of major support down here at about $12. $12 again, psychological number, right? So there is that. Thoughts on altcoins if BTC goes sideways for a while. While it may start part 2 of alts. Yeah, normally if Bitcoin goes sideways, normally that's really prime for alts. Whenever Bitcoin goes sideways, especially for extended periods of time, like there's been time when Bitcoin's gone sideways for 3 months, 6 months at a time. Those are the main alt seasons. Like when Bitcoin goes sideways for a day or two, yeah, you get a couple pops here and there on the altcoins, but it's really nothing spectacular. It's really nothing like crazy noteworthy. Kind of the thing where it's like, a lot of people end up FOMOing in because they didn't already have a bag of some of the things that were pumping. Don't FOMO into those trades. You know what I mean? Like if you don't have a lot of these coins, I've said it once, I've said it plenty of times. What do you think about divergences on daily for most alts. On the daily. Not really any divergence here on this pairing. Let me actually move on to the next one, because that is a good point. Serum. Serum is just going to be like all bull, man. I mean, this thing is just, honestly, okay. Here's the deal. Here's the deal with Serum. Everybody keeps asking me about these the SAM coins, right? The FTT token and the Serum coin and all of the shit. Anything that's a SAM coin, okay? SAM is basically going to be right up there. Arthur Hayes is going to prison. Okay, he's going to jail. I don't know if you guys saw the court documents and stuff. They're only allowing him to leave the country, and he has to be coming back to be doing all of his court cases and stuff. Like, he's under serious indictment. He's under investigation for securities fraud. He's under investigation for a failure to comply with international money laundering laws. He's in some big shit. Okay, like he's in really big trouble. That's no joke. He's probably going to prison. With the fact that Arthur Hayes now, which was like one of the major exchanges, BitMEX derivatives and stuff, major exchange for a very long time. They've kind of, they had their windfall, and the two major exchanges now are FTX and Binance. Okay, that is undisputable. Bybit is really falling behind. They don't add any pairings. So anything that CZ makes, anything that Sam makes, anything that they're creating, anything that they're engineering, anything that they're innovating in terms of their exchanges and moving these markets forward for more tradable instruments and things of that nature, all of those things are going to rip so hard. Okay. In my opinion, these SAM coins like FTT and Serum, those are probably the next like BNB. Okay. Like, those things are just going to take off. They're going to be worth tons of money. They've got tons of use case. So when I look at this, I mean, I've got some of this was previous resistance, like way back here when I first looked at this, and we used it as support here. So, when I look at things like this, I'm going to switch to an arrow. It might be a little easier for some of you guys. I don't know why it didn't change, but this is now support. Okay. When I look at things like this, it just looks so crazy bullish. I mean, like, even if this thing had a major retrace, and I mean like a really major retrace, okay, you're still looking at over 350, in this support area, right? So like, if we want to draw a box, you guys know I'm really big on drawing zones, okay? That would be your major demand zone. Okay. This is a major demand zone. We'll make this green so that I have it for later. Let's put text inside in the center. Major demand. Okay. Oops. Can't really see it there. Let's move it to the right. There. This is your major demand zone. Okay. And sure enough, what do you know, from our bottom to our top, it's right in the golden pocket. Okay. I really don't expect this going below 350. And honestly, like I just mentioned, in my opinion, these SAM coins, Serum, FTT, this is super cheap. Okay. Like, oh my God, I've said this so many times. I don't know how many times I have to hammer this into all of your heads. Okay. These coins are going to come down. A bear market is inevitable. It might be tomorrow. We might have already topped. We might see 100K. No one really knows. I don't know either. But here's the deal. In the long run, right? I don't trade altcoins. You guys know this. I don't trade altcoins. I buy them. I hold them. I do not trade them. I do not use leverage on them. I don't give a fuck what happens with the price next week. Now, I know a lot of you do trade them. That's perfectly fine. That's your style, whatever you want to do. Everybody trades different, all right? The point is to make money. So I'm not knocking anyone's ability to make money, but what you have to remember, the long-term game, especially with these SAM coins, BNB, anything of that nature, these are going to be the things that you really want to accumulate during the next bear cycle. Okay. When this thing comes down, and it comes down to a fucking dollar, in another year and a half, man, you you drop like $5,000 on this thing and buy as many of these fucking things as you can. These things are going to be worth so much money. I mean, here's a really good example. Somebody wanted me to chart BNB. Okay, let's go ahead and chart BNB real quick. Serum BNB's next on my list for my Telegram group as well. So let's go and take a look at BNB. Okay, BNB. Look at this fucking thing. I mean, this is it's ridiculous. There was a couple boxes here that I had on my daily chart. Let me make sure that these are visible on the smaller time frames here. Okay, let's make these visible. Did I do minute on this one? No, I didn't. I missed it. Okay. I mean, these things, it's just, I mean, look how perfectly these levels of support are holding here. When you see something like this on a token, everyone's like, oh, you know, don't long into resistance. Don't long into resistance. There's a difference between longing into resistance like here and waiting until you see something like this and then being able to pick a long. Okay. This is just prime. I mean, where was our high here? Our high was up here, $350. Okay. Right now it's at a $100 discount per coin from its all-time high. And this thing is going to do nothing but keep going up through the rest of the bull market. Okay. There's a major use case for this. This coin is going to come down when people on Binance that are abusing leverage, that have never really traded before, that think they're geniuses and professionals for pushing a green button in the middle of the bear market. I can't lose. All of those people that get washed out in the next year, those are going to be the people that are selling this coin. That's when the coin is going to go down. There's less people using Binance. Okay. People use it for their trade fees and a lot of other things. But I mean, like when you look at these higher time frames for this, first of all, that's not healthy right here at all. Okay. This straight up like that, not healthy. Starting to consolidate here. This is a good thing. This is a really good thing. Now I can't obviously predict the future. I don't know if this is going to come up or down further later on. But what would tell me is that this has already consolidated quite a bit considering how overbought the RSI was. It almost hit 100. It was at almost 97 on the RSI. It had to come down, right? It went totally vertical. So when you start seeing stuff like this, we're still in a bull market. Okay. We've got nothing that says we're not. Okay. All the higher time frames, everything on the higher time frames from daily and up, all super bullish. Would I be trying to long this right now? No, honestly, I wouldn't, because I don't trade altcoins like that. Would I be waiting for this to come down to like $100 over the next year or lower and then be buying the shit out of it? Yeah, absolutely. You've got major support way down here at $50. I don't think $50 is going to be seen again by BNB. I really don't. I think the lowest that we go, especially on these, medium high time frames here, is probably somewhere in here. These are our two major demand zones, right? So you've got about 150, again, psychological number. And then you've got up here, $200, psychological number. Those are the zones that me and millions of other people are looking for. A lot of people had a chance to buy in here, just under 200. Great buy. They made a lot of money off of it. But when you see consolidation under resistance and you see something like this is when you want to be buying it. Especially now, it looks like it gained support here. It looks like you've probably got a major level of 1 hour support here, and the price action is just it's just squeezing like crazy. Like when you're trying to get the last bit of ketchup out the fucking jar. This thing is squeezing like crazy. Wicks in both directions. Not very much price action. Volume is dead. Some kind of big market maker. Something is going to happen, and this thing is either going to tank. And it's just going to blow right through this and come down to $150, or this thing is going to fucking explode and it's going to $500+. So that's where I stand with BNB. I'm going to leave these lines here for my own reference. But like I mentioned, guys, these are the kinds of things that, you got to be playing the long-term game. You guys want to turn yourselves into millionaires. You missed, you weren't in the market during March. You weren't in until June, July, August. Some people came in October later. Some people only came in last month. You already missed the majority of the bull run. Can you still make money? Yeah, of course you can. If you're smart about it, you can still, everybody can make money. But long-term game, you want to turn yourself into a millionaire. These really good coins, again, BNB, FTT, SAM coins, Serum, all these things. These are the things, Link, Uni, Ion. There's a whole bunch over here. I mean, a lot of these coins are going to be the ones that I'm actually going to be looking at buying when we see that next bear cycle. I'm going to be stacking up. I've already got stacks saved. I've got it waiting in a savings account. And I'm just going to keep growing it. And when all these things bottom out and everybody capitulates and major retail starts selling off at a loss for thousands of percent at a loss, I'm going to be one of those guys that's been around for 3 cycles already that knows what the deal is, that I'm going to be buying their bags. And I encourage you guys to be that smart money. It's not enough to think like the smart money. You have to act on it. If you guys want to get rich, you guys want to make money, you guys have to act on that smart money mentality. You can think about buying a coin until you're blue in the fucking face and you're having nightmares about it, but it's not going to mean shit until you buy it. You got to do something about it. Ain't nobody got rich. I hate that saying. What's that saying? Good things come to those who wait. Man, fuck that. Ain't nobody get rich from sitting on their ass doing nothing. That's a bunch of bullshit. So if that's your mentality, you got to get rid of that mentality right now. That shit's never going to help you. Let's move on to the next coin here. Looks like 1 inch. I'm going to do 1 inch ENJ. I'm not going to go over ETH. ETH looks basically exactly like Bitcoin right now. It's really no different. So I'm going to take a look at ENJ and 1 inch, and I will do Atom, ADA, and FET. NWC, I will take a look at that real quick. That's still a very long-term hold for me. I don't even know. Do I have it on this list? It might be on one of my other lists. I'll add it to this one. NWC is a project that I was, that I was heavily involved with for quite some time. I was helping them build their platform. And where did it go? What the hell just happened? Didn't I just add it? No. Okay. Well, damn. Sure. There we go. Now it's added. Wow. Major consolidation here. It never hit my target of 35 cents. Well, we can delete that now. All these targets never got hit. Let me change all these to black so that we can read all these. Okay, let's change all these. Yeah, so major support here. I'm actually just going to change. Let me just draw a box here. Okay, this is a zone. It's clearly a zone. Look at all the wicks that we've got down here. Okay, we've got a huge zone of demand down here. Okay, huge zone of demand. Oops. God damn it. I hate these shortcuts on TradingView that drive me nuts. Huge area of demand here. And then we can just simply copy and paste this and move this up here. Huge area of supply up here. Okay. This is definitely a long-term thing for me. This is another just fantastic chart to look at. When I'll delete all this crap. This is its new floor, clearly. Like the next time that this rips, this thing's going to fucking, probably, $1 or 3 or 5. This is a long-term hold for me. There's major consolidation here. This has been going side. This is one of those coins that everyone's losing interest in because it's going fucking sideways, not doing anything, right? When you see coins like this, especially in bear markets that are doing this is accumulation right here. This is bullish accumulation. It's off of a major run up. This is accumulation. Okay. These are the coins that you want to be buying. These are the coins that you want to be investing in. Now, obviously, am I saying go out and buy NWC? No, I'm not here to pump their coins. I'm not here to promote their fucking project. Go to their website, read their white paper, see what they're all about. The reason why I like them is because they're very educational focused. They have a great educational platform. Okay. Go check them out. Google nwc.io or whatever. You all got Google. Go figure it out. Go read about them. Okay. Do your due diligence and read about these fucking things that you're buying. Don't just, Doge to the moon, Doge to $1 and fucking throw 10 grand at it. You're going to lose all your money. Don't be dumb. Okay. The goal is wealth preservation, not throw my money away. 1 inch. Let's take a look at that real quick. Thought I had it on here. All my lists got screwed up. Clearly I don't have it on here. But yeah, a lot of these coins are looking. That's a daily chart. Yeah, most of these it's looking pretty flat here. It did have one dip down. And again, we've got this major constricting price action here. Be very careful on this. This is literally right at the bottom of this trend line here. We haven't closed below it yet, but just be wary of that. Looks like we've got a major channel trend line here. Something like this, I guess. Okay. Be very careful of this. Again, these trend lines, everyone says, trend lines don't work. Trend lines absolutely work. Okay. They're decreasing levels of resistance. That's just the way that it goes. So I would be very careful with this. You do have, let's draw a box here. That's a major area of demand right here. Okay. Black, bold. Major demand. Right. Inside. Okay. Major demand right here. And how did I just do that? Well, it broke through its all-time high. Clearly, its all-time high. This is actually pretty bullish. More than anything, this is bullish. Why? Well, you retested your all-time high here. That's really good. And it didn't break down past that. That's really strong. Going sideways for so long and then kind of breaking down and then constricting price action. This, in my opinion, could kind of go either way. Again, you want to watch these trend lines. Your indicators, even on the 4-hour chart, they're flat. They've been flat. The RSI has been flat since the 25th last month. So even coming down to a 1-hour chart, the 1-hour chart looks pretty good. I would want to see a high break of this. I would want to see a close above, $4 or whatever, reclaim $4 and then start pushing towards 425. But if you start seeing closes on the 1-hour above 425, then yeah, that would probably be a good time to buy. You're probably going to end up at least retesting this. So you could set a tight stop, maybe average lower if you had a fake out or whatever, and then wait for this to break out. But this is obviously all depending, on what really happens with Bitcoin, right? So ENJ, let me do ENJ real quick. ENJ. Already had major areas of demand labeled on here. And now we're kind of in uncharted territory, right? It doesn't look like we've been up here before. It looks like we're in price discovery here. Yeah, this is price discovery. So there aren't really levels of support and resistance. This obviously is support now. This would be major support. Black. This is daily support. Forgot to turn that green. Let's make that green, huh? Yeah. Okay. Major daily support here. And then you've got these zones of just kind of supply and demand here. I'm just going to leave those there. Normally when I chart stuff, I don't really erase it off the screen. Please, if possible, check the Woo trade chart. Never heard of Woo. I'm not charting that. Absolutely loving rawness of the stream. Blah, 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 blah. Yeah. Thank you, by the way. I appreciate that, Glub. Dubwise, they always ask the pumped coins, right? Check BTC pair in case. I do check BTC pairs. The reason why I don't really chart on BTC pairs is because I want to see how much the coin is worth in dollars. Because when I'm buying them and laddering in spot buys, I like to keep track of that in dollar value. However, obviously the price of Bitcoin drags them up or brings them down. That is very important. So when I'm actively holding alts, I do check the Bitcoin pairing to make sure that nothing fucking wild is going on. ENJ, it's hard to tell where this is going to stop. I mean, you know, you've got extremely overextended indicators here. I mean, you know, this is the daily chart that we're talking about. The MACD has never been this high. So this is all new for this pairing. I mean, you're even talking about breaking all-time highs on the RSI here. In my opinion, if something happens with Bitcoin, like after that speech that's coming up here in about 20 minutes, it'll probably be going on for an hour. There's a really good chance that a lot of these altcoins are going to be coming down if Bitcoin tanks, right? If there isn't good news coming out of that speech, I think a lot of people are going to be selling, but not just Bitcoin. Like Bitcoin, we all know it's correlated more heavily now to the S&P 500. It's more correlated to the Dow and legacy markets. So when you have really bad news and the legacy markets are selling off, that takes Bitcoin down with it. So that's just something to keep in mind. I would be very careful about this. You know, on green candle, you guys want to be buying red candles and you guys want to be selling green candles. You know what I mean? So, you know, when you were buying here on this dip, you know, I mean, if you're holding from back here at 15 cents, you know, you're already up fucking 1,000%. So, you know, like, yeah, you would be taking profit. Chances are, if you entered here, you're taking profits up here or here. So if you re-entered on this dip, I mean, yeah, this looks like a prime time to be, you know, looking to be taking profits off this. Now, in terms of downside, if we just magically reversed here, if we project that to our previous correction here on the daily chart, I wouldn't be expecting less than $1. $1 right now is probably going to be your major support. It's a psychological number. So I wouldn't want to see lower than $1 here. And that's already like a 30-cent drop on this. That would be a pretty significant drop for this. But normally on a retrace, let's see. Oh, it got rid of my thing. I'll just redraw it here. Yeah, this thing is just ripping. There's divergence here on our 1 hour chart. So that's another thing. Like I said, it looks like it's possible that we're topping here. We've got higher highs in price. We've got lower highs on MACD, lower highs on RSI. Okay. When you see stuff like this on 1 hour charts and you start seeing 15-minute charts, you know, like starting to flip over, normally that's time to be, you know, taking your profits, you know, at support or, you know, closing out positions, looking to rebuy lower, whatever. Normally longer term trades, I base and I enter in on the 1 hour charts. But normally I'm looking for trends on the 4 hour and the daily and stuff like that. I really hope that didn't come through into the chat. I just got an email and it was like incredibly loud in my headphones. So yeah, watch out for that. You know, divergence, especially on the altcoins, it normally ends up playing out. Okay. Divergence is really easy to spot. Bearish divergence is when you make a higher high in price and a lower high on your indicator. And then bullish divergence, it's literally the exact opposite. So, you know, like if you're making a higher low here, which we're not, and you were making a lower low, okay, like in price, like let's say later on we make a lower low here in price, but we make a higher low here on the RSI, that would be bullish divergence. Okay. So that's how divergences work. I'm going to come out with a graphic for that. I did do one graphic already, which if you guys aren't on my Twitter, go check my Twitter out. I put a lot of alpha on here. Let me see if I can find. Let me see if I can find. Here it is. I made this graphic. this is volume analysis. Volume plays a really key part in looking for trends and looking for when trends reverse. Okay, so I also put this in my Telegram group. Again, guys, feel free to join that. This is where I post all this stuff. I'm pretty sure I posted this in the Dubwise educational Discord and stuff. So study these things. I'm going to be coming out with more of this stuff. Okay, I'm going to be coming out with more of this content. I've just been extremely busy with other clients, so just give me some time. I'm working on building my own platform, website, all that good stuff. So just give me some time. Let's move on here to what is this? ENJ. Let's do Adam. I don't think I have Adam on. Oh, I do. Okay. Ooh, wow, it's looking fucking choppy. I don't know what the hell that is back there. It's looking choppy. On the 1 hour chart, the MACD just crossed into bearish territory. So no divergence here yet on the 1 hour chart. Let's zoom out a little bit, right? Again, we've got these major trend lines here, to be watching out for. Constricting price action on some of these higher time frames, stuff to watch out for. Okay. So I probably wouldn't want to be seeing any closes below like $19 or $18. That's for sure. But again, constricting price action like this, you just have to be really careful. Draw those trend lines, put them on your screen. These are really important. Let's take a look. Impulse consolidation. So that would be one leg up, two legs up. In general, I would be expecting, probably some more consolidation in here and come up. Now, if that doesn't happen, where would my targets be for downside? Well, top, low. If this is our top, I would probably be looking for a retest. It looks like there's a little area in here of, let me make this bigger. Okay. It looks like there's a little area of demand down in here. So you've got this little area right here, basically the golden pocket, right at about $15. So anything $15, $16, if this was to break down, if $15 didn't hold, you'd probably be looking for a continuation down to like $11, $12. Now, if we break up, it's not you, it's me. We're breaking up. If we break up from here, where's my targets, right? First target, obviously, definitely golden pocket. So like $27. That would pretty much be my target for the upside for this. Now, I would like to see, whenever you get a breakout of triangles like this, pendants, whatever you want to call them, whenever you get a breakout, the most healthy thing that could possibly happen is this breaks out, hits resistance here, comes down, retests it, and then rockets. That's normally what you want to see. You want to see retests of these patterns here. That's healthiest for the price action. If you just blow out of this and it just rockets, all the way up here to the, to this extension target all the way up at $50, that's not healthy. You know what I mean? Like when this comes back down, this thing is really going to come back down, and it'll end up forming another triangle later on. And then you don't know what the fuck is going to happen. So, you really want to aim for like playing retests of these major levels of support. And there are major levels of support in here. Again, you take your horizontal line tool, bam, you've got major support here, right? Let's make this black. Right now, this is major resistance, but whatever. And then it looks like you've got another one up here. Okay. So like these are your two levels that you want to be looking for. You start seeing closes above $21, you might be good. And you do something like this. Okay. On the smaller, obviously that would be like the smaller time frame, right? Might have a small level, like 1 hour support or whatever up in here where this wick is, right? Okay. This is probably a more likely scenario. So let's move on to the next one. Let me read some of these messages real quick. Open interest in the graphic. What's the news you're anticipating? Honestly, I have no idea. I don't know what's going to happen. I'm assuming it's going to be about interest rates and stuff like that. Thanks for your stream and your contributions. I appreciate that. Yeah, what was the speech you were mentioning? Jerome Powell is the head of the United States Federal Reserve. They're the private organization in this country that prints all of our money and control the interest rates of bonds and all that good stuff. Normally, he speaks at the end of every quarter. I'm sure the Euro Financial Commission or whatever, I'm sure they do the same thing. That's basically, in Europe, that's basically our version of the European Finance Council making their announcements and, you know, all their good stuff, you know, like the housing market month over month and year over year, and the unemployment rates and the housing market rates and the interest rates and the bond rates and, you know, all that good shit, you know, all the really important like shit that has to do with like global economics, all that good stuff. FET, I already went over NWC. I just did Atom. This is Atom, right? Yeah. I'll take a look at ADA real quick. And then it looks like we're getting to the end of the stream here. I'll do ADA and I'll do FET. And then if you guys have questions that are not charts, I'll go over and I'll answer those as I'm charting these last couple coins. So if you guys have questions, let me know. If you guys are in the Discord, go ahead and type those in the live session chat. I'll be monitoring that. If you're in the YouTube channel chat, feel free, chat it up. And questions I'll take. Same thing goes for if you guys are in my Telegram, feel free, type those up in the YouTube chat. So what did I say? FET, right? Let's take a look at FET. Looks like I've already got stuff drawn here. We can erase it for now. And please say to my, what the fuck is that? It looks like German. Schwanz in mein Arsch. Yeah, something in my ass. Yeah, funny. Let's see. It's probably something dirty. It probably means dick in my ass or something. That's what I'm assuming it means. Let's see. Major area of support here. This is major 4-hour support. Okay. So be looking for that. Obviously you've got major 4-hour resistance up here. Let's come up to a daily chart real quick. Where's our major daily support? Major daily support's down here. So let's label that too. Major daily. Whoop. Supports. Oh my God, I can't spell. Come on. All right. Oh my God, why did I put an S? What is wrong with me today? I'm not high, I promise. The hell. All right. So we've kind of this previous level of like supply demand right here, this box, this zone that we have. This is actually turned into a midline of sorts. So that's interesting that this kind of turned into a midline. So I'm just going to go ahead and delete that for now. But what I do want to do is label some of these smaller areas of support and resistance. So like this looks like a pretty major level of like it's major 1-hour support. Okay. And then obviously you've got like, you know, your resistance up here. It doesn't matter what time frame, it's just major resistance. Okay. So those are kind of our levels that we're looking at now. Now this is an awesome impulse. I wouldn't expect the consolidation to be done this quickly after an impulse like that. We're talking about quite an increase here. 22 cents to almost 40 cents. Excuse me. Yeah, that's no small feat there. Let's take a look at some of these indicators. Okay, so on FET, I can tell you right now, this looks like it might be leading some of the other altcoins. Okay. Now, what do I mean by that? When I say it's leading, I mean that, remember I showed you that bearish divergence that had yet to be playing out on some of those other altcoins. This one is already playing out. Okay. This one's already playing out here. We're already getting these lower highs coming in. Okay. We're getting lower highs here. It looks like this might be leading some of the other altcoins. There was no previous divergence on this chart, but what I really want to see here, especially on the 1 hour, is I would want to see this trend line hold. I would want to be seeing it put in a higher low. If this puts in a lower low and your major 4 hour support breaks, that's when I would be looking to be targeting, probably closing any open positions, selling my spot. And then I would probably be looking for like 25, 27 cents, anywhere between 25 and 28 cents or whatever. So now if this trend line up here, again, your trend lines that breaks to the upside, it's price discovery. There's no real targets for that. You can kind of guesstimate targets. If we whip out our fib extension, let's say we come down and test this major 4 hour support, my first target would be up at 42 cents. So that would be my first level that I would be looking for there. What are your most used trading indicators tools besides volume, RSI, support, resistance, divergences, wedges, and patterns? That already sounds like a lot. Like, let's not scare a lot of these newer traders off, okay? That's already a lot. So it really depends. That's actually a really good question. And I want to see you, Clint. I appreciate you. I know that, man, Clint's followed me for a long time. Thanks for your support, man. I'll see you next time. That's a really good question. Coming from FMTM, there's not really a name there. Probably stands for something. I use a lot of different things. Okay. When I'm charting, I use support and resistance. I use Ichimoku Cloud. Now, obviously with these altcoins and stuff, I'm not going to be getting into a whole bunch of Ichimoku analysis. Okay. This looks like a total clusterfuck on these altcoins. Plus, if I was doing full analysis on every one of these altcoins, this stream would literally be like 4 hours long. Okay. So, but what I do is I use a multitude of different things. And, for higher time frames, especially, 1 hour plus, I'm looking for support and resistance. I'm looking for, volume and price action, just like you mentioned, RSI MACD. That's what you're looking at. This is my analysis layout for higher time frame stuff. Okay. Looking for trends, looking for where the major supports are. Now, on the lower time frames, like when I'm trading Bitcoin, Ethereum, whatever, I'm scalping using leverage. I've got a completely different strategy. Let's see. I want it to pop up, but I don't want it to pop up with any of my settings. Let's close this. Okay. Okay. So like this looks probably like a total clusterfuck. This is my algo that I use for scalping. What effect does Ethereum's price action have on the market? Ethereum's price action on the market is basically, in my opinion right now, it's basically just how much are you getting fucked with the gas fees. So scalping smaller time frames, this is what I'm using, right? I use this for 15-minute and below. Once in a while, I'll check the higher time frames on this, like the 1 hour or whatever, just to kind of see what's happening here. But, I use them, this is my own algorithm. It took me years to finally put all of these indicators together. I've got a video of that on my YouTube. If you guys want to go see that, go find it. It's in my tutorials playlist or whatever, where I explain what these indicators are, a little bit about how they work and how the system works. But this is pretty much what I use for, for scalping. So, when I'm looking for entries and exits, on 5-minute charts for scalping like this is not what I want to be scalping. Okay. Like when I shorted this was a good trend to be shorting. This was all chop. But, when the market is trending, I mean, this thing just rips with continuations, and that's what I want. I'm mostly a trend trader. I want to be hopping into, I'm not touching any DeFi coins today, Logan. That's going to be on the next stream. Sorry. When I'm a trend trader. I like to hop into trends. I like to know when the trend is changing and hop into it as soon as possible and get out of it as soon as possible when it's switching over. That's what I like to do. That's my style of trading when I scalp. And, on the 5-minute chart, if, I think I did take this long. I don't think I stayed in it the whole time. But that's pretty much what I do, and that's what I recommend that everybody does is, if you hop into a trade that is going to be running for a while and the market is trending, you want to let those winners run, like let them run until you have confirmation that it's stalling and the volume's coming down and it looks like it's running out of steam. You start getting big wicks to the top side, like up here. You know what I mean? Like this was a great run, up, could have rebought here, could have added to your position, went up, could have added to your position, went up, could have re-added to your position, went up, could have re-added to your position, and then you just let it roll the rest of the time. Your stop loss is way in profit. Your original entry is probably way, way, way down here. You're up probably 200% on this trade. But then you start seeing, these signs up here, on the 15-minute chart, you start seeing this trend kind of weaken, right? It looks like it's going to come up again, but it doesn't really make that big of a high. And then what do you get? Well, you got a big fucking spinning top candle here. And it's like, okay, spinning top, kind of a spinning top, doji candle. Okay. Like this is weakness in the market. Like this is when you want to be exiting, when you see shit like this, and then it, came back down, obviously. So, when you look for stuff like that, and obviously down here, you can see just by looking at the volume. Okay. If I move this out of the way, had this nice volume, whatever, this whole time coming up, really nice volume. And then the market was just, and the volume just died, those are the things that you want to watch out for. When you start seeing stuff like this, like when you see a higher high in price action and you're seeing a lower high, in the volume, that's normally not a good thing, especially when it's combined with like dojis and spinning tops and shit. That's normally the time that you want to be exiting. Or at least that's what I look for, especially with long-term positions. Like just by candle analysis, like this down in here would have been a good buy, but that would have been a great scalp. It was a spinning top down here at a bottom. Then you had a big confirmation candle. This would have been a buy. This would have been a great scalp. This is all chop in here. Like, if this candle ends as a bullish engulfing, then yeah, you might be able to scalp it up, back into major resistance or whatever. But for all intents and purposes, you just have to be really careful with the indicators that you're using. And you want to have, the most important thing that I harp on all the time is you want to look for confluence. So what do I mean by confluence? You want to be looking for confluence with all of the different forms of analysis that you're using, right? So I use support and resistance lines. I use Fibonacci levels. And what do? Well, when I see something like this, let's say I'm trading this, let's say I'm scalping this, right? On a 5-minute time frame. Fuck it. I'll just give you a live example right now of how I would look for an entry on this. Okay. So we've got a high, low, higher high, and this was a higher low here, right? So if I'm projecting downside and I'm looking for entries, I want to come here. And first I want to draw my trend-based fib extension, okay? Because I'm projecting downside. That means I have to draw the downside first, okay? Super strong uptrend. If this closes above the 618 and holds there, I want to be going long. But before I do that, what the fuck else is going on with my indicators, right? Well, we're in the bottom half of the RSI, so that's something to watch. I want to see this at least break 50. This just crossed bullishly. So on the next candle, if it's also a bullish candle, that's a confirmed MACD cross. Now, there's also bullish divergence here, right? We've got a higher low on the MACD. We've got a lower low in price. There's a pretty good chance that this is probably going to be bouncing here, right? Same thing, lower low. If you drag this out, I also have a lower low on the RSI, but I have a higher low on the MACD. So there's possible bullish divergence here. Okay. And if you start seeing some upward momentum and you start seeing some bullish volume coming into the market, this is a potential long. But you also want to be looking for confluence with some of your other indicators. So I like to use Ichimoku Cloud. Well, what's Ichimoku Cloud telling me? Well, on this time frame, Ichimoku Cloud says that I probably shouldn't be entering into a trade at all because we're rejecting now off of the 200. The 200 EMA is this black moving average. We're rejecting off of that, and the price is in the cloud. Ichimoku states the rules of Ichimoku Cloud say that the price is trading inside the cloud. Under no circumstances are you supposed to be taking a trade. So as soon as this entered into the cloud, if you were long or trying to short or whatever, unless you were already in a short position, you shouldn't be trying to short now or long now. This is just, you don't want to be doing it. So if you come up to a 15-minute chart, you can actually see that the cloud in front of you turned bearish, but you are outside of the cloud, and it did cross bullishly on the higher time frame. And you were using 200 EMA as major support here. So, it might be the kind of thing where you would want to look for an entry maybe on one of these higher time frames. You're retesting the 50 EMA here as support on the 30-minute. So in my opinion, this would be the kind of thing where the lower time frames are, for the most part, bullish. I would be looking for a close above the top of this cloud and above our, let me move this and put this to the front. Bring to front. I would be looking for a close above our Tengensen line and above our cloud. And if it pushes above your Kijunsen line, this red line here, then that would be really good. So that would be like confluence on multiple timeframes. That's what I would be looking for. If I get a close above 34 cents on my 30-minute chart, on my 5-minute chart, that's definitely, going to be a bullish move. I'm outside of the cloud here on the 5-minute chart. Then, that would be really good. So that's kind of the things that I look for. That will help me out a lot. Great teacher. Also, I'll check out your YouTube. Already following you on Twitter. Thanks for that, FTM. Appreciate it. Do you pretty much just scalp all your positions that you're already holding for the long haul? So my altcoins, no, I don't trade them at all. They're sitting on a fucking treasure. I don't even look at the price of them. They're long-term holds, they're investments. I don't trade them at all. And the only time that I accumulate them is during bear markets. So good example of that. Years ago, like I guess 3, maybe 4 years ago now, when Link first came out, when it first got listed on Binance, I bought it at like 25 cents. I bought thousands of them. I'm sitting on a treasure. I never touch it. It's my daughter's college fund. I don't trade them. I don't care what the price. Well, what is the price? It's $30, and it had its high all the way. Let's zoom out here and take this shit off my screen. Wow. Yeah. Hit a high of like $36 or whatever. Okay. Might have been higher than that. No. Okay. So yeah, things like that. This is also super toppy up here, higher time frame on Link, by the way. This is a huge red flag. If you start seeing decreasing volume and you start seeing off of an uptrend, you start seeing spinning tops and dojis like this, you need to sell. You need to get out. That means that the volume, the trend is definitely weakening. Plus, you already had a bearish cross before that, before it came up and made this next high. So lower high on the RSI, you had bearish divergence here, higher high in price, dojis. That would have been a major exit if you hadn't already exited or whatever. Anyway, altcoins, yeah, no, I don't trade them. I accumulate them, I buy them, I hold them. I don't trade them at all. The only thing that I do trade is Bitcoin and Ethereum. I scalp those daily. I also trade foreign exchange daily. Normally I'm up at 7 o'clock in the morning and I'm in and out of all my positions by noon. I didn't take positions today because I'm here with you guys. Plus Jerome Powell's speech, a lot of stuff going on with global economics today, the European Financial Commission's speech and all that good stuff. So no trading Forex on days like that for me. Dubwise, I think he was asking me. I think I already got him. But anyway, that's pretty much it for today, guys. It's a little afternoon, so I am going to call it. I'll take just a pause real quick for any other possible questions that you guys have, and then I'll go ahead and probably end up shorting the stream, end up ending the stream. Trending Powell. Let's go and see what the deal is with this federal grand jury. Blah blah blah. Rachel Powell. Why am I not following Jerome Powell? This is not the real Jerome Powell. That's why I'm not following him. The real Jerome Powell probably doesn't have a Twitter. He's too much of a boomer. He probably doesn't have it. Let's see. See if I can find it. Maybe we can stream it and watch it together. Is that? Or did he already do his thing? February 23rd. No. 10/6, the Fed live video. Is that going to be it? This video is either unavailable or not supported in your browser. Really? Okay. I'm gonna have to find it. Does anybody have a link to this? Is there any link? If we search the Fed live on Twitter, is it gonna give me something? Federal Reserve. Maybe there's something on their Twitter that has what's going on. Watch live. Okay. Register. Really? No, it's not what I want. Learn more about Chair Powell. Today is okay. No, that's not what the announcement is. Where the hell can I watch this thing, man? Does anybody know where I can watch it? It's on the Wall Street Journal Twitter. Oh, it is. Let me know if you guys can hear that. How do I? We all want to go back to work. Jesus. No. No. A straight up no. Whew. Is the market wrong? What? What? There's no audio. Why is, I mean, my desktop audio is on. Okay. I'm getting told that the audio is not coming through. So let me fix that real quick. No, the market is not going to react too great to this. And this dude from Wall Street Journal is a fucking retard. He literally just asked Jerome Powell, is the market wrong? What? What do you mean is the market wrong? The market can't be wrong. We're the ones that decide the price of things on the market. Like it doesn't, it's the most retarded question. I was expecting, I am following on Twitter. I was expecting, I wasn't expecting that. I don't know what I was expecting, but I wasn't expecting that kind of a dumbass question. That's for damn sure. Desktop audio is not coming through. So I don't know. I'm going to have to play around with it. It's because all of my audio goes through a digital audio workstation. So it should be coming through though. My desktop audio is not muted. Let me know now. Now is it coming through?
So we never say, hey, we're going to do this in 18 months or 24 months. It's always when these conditions are fulfilled. So for asset purchases, as you're aware, we say that they'll continue at least at the current level until we achieve substantial further progress toward our goals. That's actual progress, not forecast progress. And as I mentioned, there's good reason to think we'll begin to make.
We'll have a little
soon.
We'll have a little watch party.
Happens, as now seems likely, it will take some time to achieve substantial further progress. For interest rates, to raise interest rates above zero. Very simply, we said we'd want to see labor market conditions consistent with our assessment of maximum employment, and that means all of the things that we talked about. We'd want to see inflation sustainably at 2%. We want to be on track to have inflation run moderately above 2%. So these are highly desirable outcomes that would represent an economy that's very far along the road to recovery. And there's just a lot of ground to cover before we get to that. The last thing I'll say is this, and I want to be clear about this. If we do see, as I mentioned, if we do see what we believe is likely a transitory increase in inflation, where longer-term inflation expectations are broadly stable at levels consistent with our framework and goals, I expect that we will be patient.
So there's a lot there. Thank you for that. I guess, the question is has the recent run-up in bond yields been consistent with your economic outlook and with the new framework that you've adopted that takes a more relaxed approach to inflation?
I don't want to be the judge of a particular level of one interest rate among many, one asset price, if you will, among any. Our new for your the people at your conference benefit, our new framework says that we will seek inflation that runs moderately above 2% for some time after we've had a shortfall of inflation, and it also says it commits us to not raise interest rates just because the labor market gets strong. And those things, I think, will be good for the labor market over time. Again, I would just say, as it relates to the bond market, I'd be concerned by disorderly conditions in markets or by a persistent tightening in financial conditions broadly that threatens the achievement of our goals.
And I understand why you wouldn't want to comment on a specific level of rates, even if the level of rates isn't a problem.
Sorry, guys. I know that was super loud. Let me turn my emails off.
Adjusted over the last week, problematic in your view?
It was something that was notable and caught my attention. But again, it's a broad range of financial conditions that we're looking at, and that's really the key. It's many things, and we want to see, and would be concerned if we didn't see disorderly conditions, orderly conditions in markets, and we don't want to see a persistent tightening in broader financial conditions. That's really the test. it's not appropriate to isolate one particular interest rate or price. It's more of a broader assessment that we make.
I guess what I'm wondering is the market now believes the Fed will raise rates earlier and faster than it thought a week ago. Are you saying that's consistent with your outcome-based policy guidance and with your new framework?
It's going to depend entirely on the path of the economy. So I laid out the conditions upon which we would consider raising interest rates, and that's labor market conditions that are consistent with maximum employment, which is, that's a big thing to get to, and it will take some time to get there, right? Inflation sustainably at 2% and inflation on track to run moderately above 2% for some time. So those are the conditions. When they arrive, we will consider raising interest rates. We're not intending to raise interest rates until we see those conditions fulfilled.
And he just said at least a year.
It will depend entirely on the fulfillment of those conditions. And as I said again, if I've told you that we think we're likely to see inflation move up during the course of this year through really two things. First, the base effects I mentioned, but also just kind of reopening effects where businesses will be potentially hit by a lot of demand as the economy recovers, which is a good thing. But you could see bottlenecks, you could see prices moving up. We're inclined to see those as transient. And there's a difference between a one-time surge in prices and ongoing inflation. Ongoing inflation, where prices go up year after year after year, tends to happen when people's psychology becomes that they believe that's what will happen, and they have no faith that the central bank, frankly, will prevent that from happening. So, as I've said, our
he's not going to prevent it from happening.
Inflation expectations anchored at 2%. If that happens, then a transient increase in inflation will not affect inflation over a longer period. And we intend to use our tools to keep inflation expectations anchored at 2%, which gives us the ability to do all of the things we do when the economy is weak.
It could take months, though, for the data to contradict or validate this narrative about transient inflation. And obviously,
okay, so just a note on this while we're watching this, any of you that are still with me, I'm going to comment on some of the things that are going on. First of all, this Wall Street Journal dude that's asking him these questions is a complete fucking idiot. He keeps asking him the same thing over and over again. Well, when? Well, when? Well, when? He already said it's going to take at least a year. It's not going to happen this year. He's already said that multiple times. This dude keeps harping on the same fucking question. When is it going to happen? When? He doesn't have an answer. He can't fucking tell him. He's just like, look, it depends on the labor markets. It depends on the economy reopening. There's a lot of aspects going on here. And this dumbass keeps wasting his time and asking him the same question over and over. You can tell this guy is getting fucking frustrated here.
You've got to have a very strong labor market and inflation performing in line with ours. It's a picture of an economy that is all but fully recovered.
He's literally had to tell this guy the same thing like 5 times.
I would say, realistically, that's going to take some time.
And as we sit here today, do you think the hope of a brighter outlook you've discussed here might lead to substantial further progress being achieved this year?
Oh my God. Okay. I'm not going crazy here, right? When I first started the stream, isn't that the first question that he asked is, do you think it'll happen this year? And his very first word out of his mouth was no.
Right now, we haven't been making much progress. I mentioned 29,000 jobs per month for the months of November, December, and January. So, and spending was maybe a little better than that, but in the job market, you saw a real slowdown at job creation. That wouldn't get you to maximum employment anytime soon. That's just not enough. So I do expect, and many forecasters expect, that there'll be a pickup in job creation. We'll have to assess that when it comes. I don't want to be making, but again, I think realistically though, it's March, and we're going to start, presumably in the next couple of months, we'll start to see stronger employment. And we're going to want to see substantial further progress in both maximum employment and stable prices. That's going to take some time. It just will take some time because, you've had 3 months now where you didn't make much progress. So we've got to get going and start making it again. And for us to assess that and signal forward, it's going to take some time.
As you noted, the Fed is buying $120 billion per month in Treasury and mortgage securities.
Ooh, here we
You've been
go.
saying for the past year, that your asset purchases are designed to support market functioning. Have you seen anything in the Treasury market?
They're designed to make the
that
market go
suggests
up.
a need to lengthen the maturity profile of your purchases?
So we think our current policy stance is appropriate. As I mentioned, the federal funds rate is at the effective lower bound, which is our technical name for zero or close to zero. We provided really strong guidance about the conditions we need to see before we considered raising it. We're buying $120 billion in treasuries and mortgage-backed securities across the curve, and we'll continue at least at that pace until we see substantial progress toward our goals. Financial conditions are highly accommodative, and that's appropriate given the ground that the economy has to cover. It's always the case that if conditions do change materially, the committee is prepared to use the tools that it has.
Oh my God, buffering, really? Okay, let me turn the volume down there for a second. I was gonna get ready to tell you guys something. Literally with a whole bunch of fancy language that 99% of people can't understand. What just happened here is buying bonds. Okay, that's what allows the Fed to be printing money in the U.S. economy. And he basically just said, "Yeah, there's not going to be any stop to it. We're going to keep continuing until hopefully maybe someday the economy recovers." Not good, basically.
It needs to be considered at this time.
Nick, as I said, I wouldn't want to speculate. Really, I'll just say we'll if conditions do change materially, we'll be prepared to use our tools.
This Wall Street Journal guy is killing me right now.
At time to foster the achievement of our goals.
I know a lot of this talk about inflation and interest rates can feel abstract, and so I wonder if you could put into plain language what the practical effect is of the changes the Fed has been making over the last year to your framework. What does it mean for everyday workers?
Oh my God, that's such a broad question.
So I guess I have to say, for a long time, and when I was entering the job market years ago, when we had low employment, we had high inflation. So when the job market got good and tight, employers were actively seeking people, and there were plenty of jobs, inflation would be moving up, and therefore the central bank, the Fed, would be raising interest rates to cool off the economy. And I would say 50 years ago that was appropriate because there was this tight connection between unemployment and inflation. More recently,
yes,
though, I think the Fed established its credibility several decades ago on inflation, and since that time, the connection between having a lot of people out of work and inflation under control has gotten very, very weak. So our new framework very explicitly takes that takes that in, that new learning, that new understanding, and says that we won't raise the interest rates to cool down the economy just because unemployment gets lower, just because employment gets high. We're going to wait to see signs of actual inflation or the appearance of other risks that could threaten achievement of our goals.
Wait to see
and we've seen that the economy can sustain very low levels of unemployment without inflation. So what does that mean for job seekers? It should mean that the job market will be stronger over time. We also saw the terrific social benefits of a very strong job market during 2018, 19, and the early part of 20.
Okay. Another thing, just to clarify here, when he's talking about inflation, okay, he's not specifically talking about the inflation of the dollar's value. Okay. He's not talking about the inflation of the dollar's value. He's talking about the inflation of the actual interest rates. Okay. There's a huge difference there. And when he says, "Oh, we'll look for signs of inflation," what's fucking hilarious is that the inflation is already happening all around us, but it's not happening in a traditional aspect where it's just like we can see the dollar getting devalued. We're seeing it differently nowadays because it's like when you go to the store 6 months ago, when you opened up that bag of chips, the thing was 3/4 full. Now the price has increased by, 15 cents a bag, and you open up the bag and instead of it being half full, it's like, a quarter full. Okay. That's inflation, and it's happening all around us. And this Wall Street Journal guy is like, man, I was really hoping that this dude was going to fucking slam this guy. And he's like being a little pussy about it.
Well, so many people, particularly people who are now entering the job market, will not have lived through high inflation. And high inflation is a very bad state of affairs, and it hurts people the most on fixed incomes and lower incomes who have less wealth to draw upon. So
Not you.
inflation was very high when I was in college and coming into the job market. So it's really not something we want. But I would say, at the Fed, we are
Oh my God, with the buffering. Man, Wall Street Journal, you suck with the buffering.
well
That's
aware
definitely
of the
not my
history
connection.
and how it happened, and not going to allow it to happen again. It was a situation where the Fed didn't step in when it should have, when inflation pressures were building. Not at all the current situation. Inflation is currently running below 2%. It's running at 1.5%. But we're very mindful of what happened in really the 1960s and 1970s, and determined not to repeat that mistake. But you have to differentiate, though, between one-time price effects, such as things that happen around the reopening of an economy, not something we have much experience with, and just the sort of, when I say base effects, it's a technical term. You look through that; it's not really signaling anything about inflation. So, I mean, we're very mindful, and I think it's a constructive thing for people to point out potential risks. It's always constructive. I always want to hear that. But I do think it's more likely that what happens in the next year or so is going to amount to prices moving up, but not staying up, and certainly not staying up to the point where they would move inflation expectations materially above 2%. That would take,
okay.
The public.
This dude is literally saying that when the economy reopens, that they're going to jack all the fucking prices up of everything and inflation is going to be through the goddamn roof. He's basically saying it directly to our faces. It's like a huge slap in the face, especially when everybody that's really needed the money in this country from these fucking stimulus checks, instead of giving everybody stimulus checks that really needs them, the government's basically just been arguing the entire year and given us for almost a year and a half worth. They've basically given people like 2 months worth of rent. Okay. It's like the biggest fucking slap in the face. Now they're going to reopen stuff and they're going to jack up the interest rates anyway to compensate for all the fucking money that they've lost.
A year ago yesterday. And so as we mark that anniversary, what are one or two of the most important lessons you think we've learned from this economic crisis?
Yeah, we've been thinking about that a lot. You're right. We're sort of going into the anniversary of that extraordinary period. So the first thing
How about
is,
don't print money?
We really implemented something that we learned from in the last crisis,
fucking
the global financial
asshole.
crisis, and that is that we needed to move quickly and powerfully with our tools and not hesitate. And we really did that this time. And so did Congress, by the way. The CARES Act passed within a month, really, of the pandemic starting to get going. We had very strong fiscal policy in the original CARES Act, unanimously passed by Congress, and we cut rates twice. We started asset purchases to support market function at an unprecedented level. And we also,
what he just said right there is printing money.
And opened facilities to replace to assure the flow of credit to households, businesses, and municipalities in the country. All of those things were in place very quickly. So thing one is, when you have a real crisis, attack quickly and don't hold back. Thing two is don't stop.
Money printer, go burr.
So there's a real sense that in the last crisis, really fiscal policy pulled back and became tight, and it led to a very long, slow recovery. So we're committed to using our tools and staying on the playing field with our tools until the job is really done. We're committed to that, and Congress, of course, has come with quite strong fiscal policy, and so I think we're in. If you look around, we're in the place we're in now. There's still a lot of pain out there, and more than 500,000 people have lost their lives to the pandemic. But compared to the economic scenarios that we were contemplating a year ago, this is it's good to be where we are, and particularly with the vaccines now. No one thought we'd have vaccines within a year, less than a year. And now vaccination is moving at a good pace. We really are looking, if we can just decisively end the pandemic, we could get back to normal and avoid a lot of the longer term damage that we were concerned about happening. But we haven't done it yet. We haven't succeeded in this yet, but we're right there. I think there's, if we can, the next couple of
All
months will be
right.
very
Huge issue. This dude is saying that there's been no long-term damage. They've printed like literally $7 trillion in a year. And this guy is trying to say that there's not going to be any long-term damage from that. There's not going to be any long-term effects from that. That's probably the biggest bullshit that I've ever heard.
$2 trillion. Is this going to be too much, too fast?
No, we
No. His first word out of his mouth.
Our job,
no.
as assigned by Congress, is to use our tools,
Print money. Our tools, the printing machines to print money.
We're not the Congressional Budget Office. We don't make assessments of, and we don't play a
Oh
role.
my
We're not
God.
on Congress testifying on this or that fiscal policy. We're not in the discussions or the negotiations. It's just.
I bet you're not.
So I wouldn't comment on this particular fiscal policy.
No
It's just
comment.
not. It's just, we have this precious independence the Fed does from political
Oh,
interference
wow.
in our decisions. And, the other side of that is stick to your job, stick to your knitting, which we try to do.
Yes, we've
Yeah.
heard that from you a few times before. Since we are here talking about jobs and careers, you said recently that you love your job and your term as chair is up in less than a year. Would you like to serve a second term if it
No.
was offered?
No, please
So
say
I
no.
have nothing for you on that today. My focus is on,
Oof.
the current challenges that we face and doing my job. There's a lot left to do. We have a lot of ground left to cover, and good reason for optimism. I mean, the last maybe lesson would be, even in terrible times, try to take counsel from your hopes as well as your fears, because
Oh my God, what
in
is this
March and
dude
April
do?
of last year, I mean, but you saw the way the people responded and the way, the response, and then where we
Oh
are.
my
It's really,
God.
we should never sell ourselves short. And so I would just point out that it's good to be optimistic, but nothing new for you on that topic.
Wow.
On that note, we look forward to the day when we're able to have events like this in person again. But notwithstanding that, we're honored to have had you join us virtually today. So thank you, Chair Powell, for a great conversation.
Oh, fuck you, Nick. Your questions were
And
shit.
also, thanks to our audience.
What a total fucking man. Okay, so let's just go back to the freaking chart here. I'll just fucking change my screen. Yeah, my chart layout was not saved. Whatever. I don't even know how many people are here. Nick needs to get Nick Tilomanos or whatever the fuck that guy's name is. That dude, I'm telling you right now, that motherfucker needs to get fired straight up. The questions were shit. He asked the same question like 4 freaking times. Okay. That was really, really bad. Now the other thing that was really, really bad, probably worse. Let me switch my, boop. Okay. Let's go back over here. Probably what was worse than that, okay, was the sheer fact that whenever Jerome Powell was talking about, we're going to use all the tools that we have available to us. We're going to use all of our tools to get the job done. We're going to pull out all the stops, right? And all this other crap. He's literally talking about buying more bonds, buying more treasury bonds to be able to pump that money back into the economy at a hugely inflated rate. The way that he's wording everything is very technical, so I wouldn't expect the average person that doesn't have any idea what's really going on and doesn't really have any idea what this guy is actually saying when he says these things. Okay. When he's talking about inflation rates, he's not talking about the inflation rate of the dollar. He's talking about the inflation rates of the interest rates. Okay. Like the inflationary interest rates. Keeping that at 2% a year, just, put that in perspective. Okay. that means that if something that you pay for now, 10 years from now is going to be 20% more expensive than it was 10 years prior. Think about that fucking number for a second. Okay. Like, oh, we aim to keep the inflationary rates at 2% a year. 2% a year is like fucking ridiculous long term. Okay. Like that's nuts. It needs, in my opinion, it needs to be way below than that. Now, obviously there's a lot of things that go into this. Like he mentioned, like the unemployment rates and a lot of other things. Okay. There are a lot of things that go into that. But over and over and over again saying, basically we do what Congress says. If Congress says print more money, we fucking print more money. That's extremely dangerous. Guys, I'm really worried about that. I really don't know how the markets are going to react to this, but it's very clear that at no point now or in the future do they expect to stop printing money. That's extremely crystal clear. They're going to pull out all the stops and use all the tools that they have, i.e. their money printers, and print as much shit as possible. So I was expecting a little bit more of a dip in terms of Bitcoin here, but we're really just seeing this nonsense. Let's take a look at the Dow and see if anything happened here. Right after he started his speech, it just took a shit and landed directly on support here. Not looking too great for the markets right now. This obviously wasn't a really good thing, but it looks like we've made a new base for a possible trend line here. And honestly, this diagonal, I'm probably just going to copy and paste that and move that up here, because this is pretty much seeming like what we're going to end up having in the future here with this. Oops, that's not a horizontal line tool, being some kind of support line here. Okay. Somewhere in there. Sorry, here. So, I'm not expecting the markets to react super positively to any of this for the next week. Maybe this is all we get, maybe not. The SPX doesn't look like it's it looks like it's pretty much doing the same exact thing here. It looks like a lot of the pairings are starting to flip over with everything that happened over in Europe today with their announcements as well. So across the board, this doesn't really look like too great of a thing here. Yeah, basically right at the beginning of his speech, everything was just tanking. Why would it tank the markets with more quantitative easing coming? Well, because people aren't stupid. People aren't dumb. They know that quantitative easing means printing more money. I'm sorry I didn't have my charting screen up. I'm an idiot. Quantitative easing simply means printing more money. People aren't dumb. They know that printing more money leads to more inflation, leads to higher prices of things over time. That's not good. So people selling assets and then turning those assets into something else that's non-inflationary is, a likely thing. So it's kind of hard to tell right now what's going to happen. I think if the markets were really, really going to be flipping over here, we would probably see that happen at the close of this hourly candle. It looks like Bitcoin might finally be trying to pick a direction here. Not really sure yet. Still moving sideways. This is 1, 2, 3, 4, 5, 6, 7, basically 8 hours of just complete bullshit price action. Not really happy with Jerome Powell. Obviously, he didn't want to cause the markets to friggin' do anything super crazy, so he didn't comment on if he was, going to be, like Fed chair next year or whatever his term is up. No information on, if he's going to be doing it again. I hope that he's not. I mean, we really need to get somebody, I mean, it's the United States. We're the world reserve currency. Probably not for that much longer, but we are. And I think we need somebody younger. We need somebody more responsible. We need somebody that doesn't have their head up their ass. We need somebody that's not going to give a fuck about the questions that they're going to ask them. Somebody that's going to give it to us straight. Somebody that's going to tell us what the deal is without beating around the bush, without pussyfooting around, without using words like quantitative easing and the resources provided to us and shit like that. I'm sick and tired of hearing shit like that. If you're going to print money, just tell fucking people that you're going to buy securities and it's going to inject money into the economy. Don't beat around the bush. Don't call it quantitative easing. Don't have this long, stupid fucking way of explaining it. It doesn't make any sense. There's no need for that. We're not stupid. The government would like to think that we're stupid, but we're not. And, it's just one of those things where we're just going to have to wait and see. It looks like Bitcoin is taking some kind of a reaction here. Let me bring up dual screens and switch this over to the Dow. Chances are this is, or the S&P, whatever. Whoops. Chances are this is correlated. Yup, sure is. Holy crap. Look at that massive red candle. Yeah, so that's basically what's happening right now. Markets are kind of tanking on this news. The S&P on this 1 hour chart barely had gotten into bullish territory. It's crossing over now. There was very, very low volume up until the speech. Price was increasing. This was scalpers. And then this was mostly people opening up puts and trying to sell that speech that started at noon. This would be a massive engulfing candle for the 1 hour chart. So it's not looking too good. Normally the narrative is like more money printing equals Bitcoin and stocks rising. Yeah. And more money means more people have more money to buy shit. So that's absolutely true. The idea of this is what makes markets go down. But naturally, when people have more money in their pocket, they spend it, so that's not to say that they don't get their fair share back. Obviously, there's sales and use tax for everything that we purchase and things like that. So, they do get a large portion of the money that they print. They do get a large portion of that back. But again, it's all post-inflationary at that point. They're getting it back. They're buying securities which are devalued, and then reselling the devalued currency and injecting it into the economy at an inflated rate. That makes inflation go up. That makes prices for things more expensive because the value of the dollar is less. It's a whole chain of events, and there's really no end to it. We're kind of damned if we do, damned if we don't at this point. If we don't print more money, we go into a major depression, probably worse than what this country saw in the 30s. If we do continue to print money, we go into a depression that's worse than the 30s because the economy completely collapses. So it's kind of a catch-22. Eventually, Rome burned. The sack of Rome. The same thing is pretty much happening here. Okay. This is exactly what they did. A republic turned into a democracy, turned into a two-party system, turned into major corruption. Then they started fucking with the currency. They started coin clipping. It started inflating their currency, and the whole thing fell apart. And that's literally exactly what we've been doing. We were a republic, then we were a democracy. Now we're a two-party system. There's endless amounts of corruption. Our currency is getting highly inflated, and the next step is it comes crashing down. So all of this money printing, the idea of that, yeah, that's not good. That's really bad. If this trend line for the S&P 500 does not hold here, this is what I'm watching. I might, not that trend line, this low here. This is the one that I meant. If we close below this trend line, that's probably a major short opportunity. Today, I'm obviously, like I mentioned at the beginning of the stream, I wasn't in any long positions. And I'm pretty much sitting in spot and sitting in cash right now. I'll wait until we end up tanking. I'm not going to try to hop into a short right now. I want to wait for some confirmation on these 1 hour time frames, which is going to be closing here in just about 10 minutes. So if we do end up getting some closes below these levels, do I think Bitcoin has the possibility to decouple from the traditional markets? No, not at this point. If anything, it's going to get more and more closely correlated. It's not going to decouple ever. As more and more people start finding out about it, as more and more people start buying it, you have to remember it's listed on the CME futures. It's listed on the traditional legacy markets. It's going to be correlated. And as more people and more volume gets put into Bitcoin, it's going to be more greatly correlated. This is going to be an astronomical close for Bitcoin. If we close below this 200 EMA, we had only just climbed back above it, and we're testing it here with this news today. If we fall back below this, there's a good chance that we could see some extended downside to be retesting probably 43, 42K and lower. So that's what I'm going to be looking out for here. This is kind of a pretty decisive moment for Bitcoin that's coming up here. We've got 2 hours left on our 2 hours left on our 4 hour candle. So that's halfway through. If we switch to a 2 hour chart, we're just inside of a massive red cloud right now. It's not looking too great. Yeah, if anything, this is probably not too good, and we're only about halfway through the day today. So I'm going to be watching this very closely. I'll go ahead and probably end the stream in the next few minutes here. I just really want to see with you guys what's going to happen with this 200 EMA. So we'll check this out. But just a few other notes on, things that Jerome Powell was saying is, a lot of this stuff is really, it's not good. it's not good. I mean, blatantly, like with a clear, cold face, it's not, the economy is not going to recover this year. Like straight up, that's what he said. It's not going to recover this year. It's going to take a year plus to figure out what's going on with the economy, for employment rates to stabilize, all of this stuff. And I can promise you that no matter what, this is definitely going to be the last stimulus that gets pushed out. This is going to be the last one. And if I was a congressman or a senator, I would be voting, personally, I'd be voting probably to deny everything in that bill except for that $1,400 check. They already scrapped, what's amazing to me, they already scrapped so much bullshit in that bill, but it's still $1.9 trillion. So the people that need the money aren't getting any more money. And they scrapped a whole bunch of things that were in the bill that were useless, that money shouldn't have been going to. So did it get replaced with other shit? Or where's the money going? Like, who's getting it? What's getting it? So that's my major question is, what the fuck is going on? If they took a whole bunch of pork out of that bill, where the hell did the rest of that money go? Why isn't the bill less money? If it was $1.9 trillion and they took out 500 million or 500 billion or half a trillion or whatever dollars from it, why is it still 1.9? Why isn't it 1.8 or 1.5 or whatever? It doesn't make any sense to me. I don't know what's going on there. It might just be a marketing thing or a news thing. Everyone's known that it's been $1.9 trillion. Kind of sounds like marketing to me. It's like when you go to the store, stuff is $1.99 or $29.99. It's never $3 or $5. Okay. It's always, there's always a 9 at the end to make it appear like it's less. So I feel like that's kind of what's going on with that. So Yeah, the market is just man, it's not looking good right now at all. That's not looking good. Really wish I would have stayed in my short from last night. I really wish that I would have gotten stopped out on this wick. I would be in some major profit right now. And I only got stopped out for like a couple bucks, I believe. My average entry was up here, almost $51,000. So that kind of sucks, but it is what it is. There's always another trade. So this last 5-minute candle, man, that looks bearish as shit. Oof. That is, oh my God. Yeah, that's a solid oof right there. That's a really, really solid oof. So this is the last 5-minute candle of the praise Cobra's magic. There ain't no magic here, man. Oh yeah, wow, that's really not good. Yeah, the S&P is just fucking nuking. Really nuking. Like hard. Jesus Christ. That's pretty crazy. Looks like we're going shopping for a few days. Yeah, probably. This is not it's not looking too good for Bitcoin right here. But I mean, even on this chart, okay, like you can see what hour is this? This is a 5-minute, this is a 4-hour. Let's look at the 5-minute. Okay. Okay. You can see how closely correlated this is, right? Like you guys do see this, right? Okay. Now, the only difference between these two charts is that this was a higher high on the SPX and there was divergence. See, there was bearish divergence on this, but we made a lower high here on Bitcoin. So yes, these are both tanking. No, it's not good. I should probably start investigating where are we going to start seeing, proper downside here. Okay. Where the fuck did all my drawings go on my chart? Oh, duh. We're hitting my original bearish target, my first one at least. So that's definitely going to end up getting at least wicked into. This is a super, super bearish candle right here. So we're going to have to be watching this very closely on this 1 hour and 4 hour chart. If we start seeing closes below this, we're definitely going to be coming back down and retesting these major supports at around 45K. So it is looking like at the end of the day, it is looking like this bearish divergence on the 4-hour chart. It's looking like that's playing out here. That's what we're seeing. A lot of this is from news, but also there's heavy fundamentals on this as well. So this is just not, it's just not looking too great here at all. Not looking too great. So that's pretty much it. 1 minute till the candle closes and we'll see what happens. I think some people are going to end up trying to buy this bounce here. I don't really think that that's a good idea to be doing that right now. That's probably not good. So I'm not going to be attempting to be buying, certainly, especially not when you've got signs like this all over the place that are just like, hey, we're going to be moving lower. So don't try to be a hero. Don't try to catch dips. It doesn't work. It doesn't work. Every time that I try that, I always get burned. I always end up getting burned doing that, not taking my own advice and then having to add to a loser to lower my DCA and then still closing at a loss anyway. It's just not worth it. So yeah, this zone that we have here looking mighty interesting. Mighty interesting. I mean, this goes back even further, so yeah, wow. All the way back to here. It holds relevance all the way back to here in first week in February. So this is going to be a key area. We're going to have to kind of see what the reaction, we're going to have to kind of see what the reaction is in this area here. What I'll do real quick is I'll load up this liquidation chart. We'll go ahead and take a look at this real fast on Binance. Let's look at let's see what's on tier 3 first and see, are we getting close to the point where we're going to see a major long squeeze here? And it's looking like we're getting dangerously close to that. Very, very dangerously close to that. There are a lot of 100x liquidations down here on Binance, around the 48.3K mark. And then we've got a little liquidity pool down here at 47.8K. So those are going to be, pretty much key levels of interest. Those are right in here. So those are going to be key levels of interest to me of where I'm going to be looking for a potential bottom. But if we see some kind of massive squeeze, like we did the first time around, I would expect probably the majority of this, all the way down to 46K at least, to be liquidated. There's a lot of long liquidity down here that stands to get liquidated. If we just look at the super big ballers on Binance, this is our next liquidity pool down here, 48.2. So that would basically be just the top, I guess. Yeah, like the very, very top of this zone. So these are a much smaller time frame. This is like literally a 1 minute chart. Let's take a look at BitMEX. BitMEX has a lot lower liquidity with what's going on with Haze. 47.8. So still, again, that 47.8 area right in the middle of here. Well, with all that, we might stand a good chance of potentially bouncing here. But we would have to bounce here. If not, we're definitely first visiting this major 1 hour support at 47.5. It's possible that we get a small bounce to 50K and then just really reject and come deeper. So I'll be watching this very closely. I really appreciate you guys joining the stream. I'm going to go ahead and cut this off. The stream was a hell of a lot longer than I expected. So I'm going to record the KMAC video and edit that. That will be available for my Telegram members tomorrow. But the actual video itself will go live to everybody else on my YouTube on Tuesday. So that being said, again, I really appreciate you guys. Check out all of the links in the description below. If you want access to that High Block Capital platform, there's links for that, my Telegram group, and all of that other good stuff. And until next time, I will see all of you guys later, and happy trading.